Hello, everyone. So today I made a video where I decided I wasn't going to trade. So I thought, why not make another one and explain why I decided not to trade? So today is Wednesday. We had read for the news, FOMC to be specific. But the reason I didn't trade wasn't because of FOMC, right? So let's sort of break it down. So first, I'm on ES right now, and what time frame are we on? So we have 30 minutes. So let's go back to the 5 minutes. So if you don't know, that's my operational time frame. All right. So this is where we currently are. Let's do a replay. Let's go back. Let's go back right here. Okay. So my model framework used to be called, well, I used to call it the FIB model, but recently I've changed the name. I've started to call it the two-step model because that's really what it is. The original. So if you watch my old videos, you'll know that this model came from a book called the Fib. It's called Fibonacci Trading, something like that. Um, and there's a section in the book called the two-step. I think it's called two-step pattern or something like that. So that's where it originally came from. Now I've made some changes. Obviously, it's been a while. So I just thought, why not just go back to the original name? I mean, it was called the two-step pattern, but I'm just going to call it the two-step framework or the two-step model, just because it's a framework. So no rules. So there's three stages to the framework. The first stage requires me to determine direction. And I do that using my anchor. So the first 30 minutes, 40 minutes of trading, just 9:30, I use that to determine direction. Now, what we see here, this is 5 minutes. By the way, it's 5 minutes. Sideways movement. That automatically tells me what the direction is. There's no direction. So there's no need to trade. You see, I only focus on the first part of the stage. When that is fulfilled, I then move on to the second part of the stage. That's what stopped me from trading. So I mainly focus in on AM session. So the reason why you have all these colors, these are all micro sessions. It just makes things easy for me to see. I can take them off, but I like them. So this green box is the first 30 minutes. And I mentioned as part of the framework, so the first stage, I need 30 to 45 minutes of time to determine direction. I want you to notice something. You see, I mentioned also that the trade can still work, it's just there's more risk because of the news. Yes, I do not trade the news itself, but I do, when I can, trade before the news and I can trade after the news. Because I have an operational model, what it means is on any given day, I can go in, follow the model, and go out. I don't need to take on additional risk. So when I saw this sideways movement, there was no need. My AM session was dead. Now, I want to show you that the trade still worked out. So let's go to 2 minutes, I think. 2 minutes, probably easier. All right, so we have a high. We've got a low, right? So this high to the left and high to the right are higher than this. That's your direction, right? We've got a direction from there to there. Look at the time, 10:15 or 10:14. That's within that first 30 to 45 minutes. So you hear me say this all the time. Allow for 60 minutes, but the best directional trades happen within that 30 minutes to 45 minutes. 45 minutes is an extension, 30 minutes is your average, 1 hour is an overextension. And personally, I'm looking to get in and out within 2 hours overall. Okay, so that's why that is very important, because we had this noise. There was no need. That's actually what stopped me from trading. That's why I decided, no need to trade. And I just come back tomorrow. So let's carry on with this, because the trade still happened, right? So I still want to show you there was a direction, stage one. Stage two is we need to identify fair value gaps inside that range, right? So we've got the range here. We have a 5-minute fair value gap. In this case, it's a volume imbalance, and it's always based on the 5 minutes. That's my operational time frame. You can use 2 minutes. You can use 1 minute. You can use 3 minutes. But my experience, I just use 5 minutes. And now we move on to stage three, which is we wait for price to come into that fair value gap, and that fair value gap must overlap with a fib. So if we draw a fib from this high to this low, we have the 60 fib. Yes, I say 60, 30, but you know what I mean. So that overlaps. We get a tap in, and if we run this a little bit, we get a small pullback. Could have entered there or there. Stop loss above here initially, and then you move your stop loss down here. Where I put my stop loss, sorry, I got a cough. Where I put my stop loss will depend on the day. It will depend on the trade. It varies, but the default is always the peak. And if I get an entry around the 50-60% above, I will use that as my stop loss, right? And that's it. That's the 3 stages: direction, fair value gap, fib. The fair value gap must hold, right? So, I mean, if price, for example, just does that and doesn't stop, then that's not a trade, right? That's nothing. So fair value gap must hold. Final thing that we're just doing is just projecting a measured move. That's it. We're projecting a measured move. That's where we want price to go, right? So let's play that. Bang. That's it. That's it. See? So 2-step. Okay, it's just direction, fair value gap, overlap, and measured move. Rinse and repeat. The one thing I do also want to mention is, because I said it's a framework, that first stage also I have a so no rules, but a criteria that the first swing must be 20 points or more. This is about 19, 18, give or take, right? Which is good. On any given day, that's good. It'd be nice if it's a little bit more, but on any given day, that's good. The fact that it's less than 20 and we have news also would have not allowed me to take this trade. But the main point I want to make is this: if you have a repeatable model, it doesn't need to be like 100% success rate. Just something that you know works, repeats every day. You don't have to look for it or strain your eyes or stuff like that. Then there's no need to take on additional risk. Trading itself is risky. When you then add macro news and stuff like that, it's riskier. So why take on the risk? In my case, I already have this noise that took up most, if not all, of my directional move time frame. So I'm looking at 45 minutes, and in 13 minutes, it just went sideways. So I don't know if this is a direction or just a breakout or a sweep. Or I have no idea because it didn't give me enough data to work with. It didn't give me enough data. And this is why I talk about clarity. Why sometimes I'll move from ES to NQ or YM. That's because of clarity. So one symbol or one security might just be going sideways during that 30 minutes, while the other isn't. If the other isn't, then I'll trade that one. But by default, it's always ES, right? If ES isn't clear, then I'll go to the other one, but the other one has to be clear. So that's it, guys, on this video. It was just to explain why I did not take on the trade. Why I just wait. I just wait for the next trade. And that's because my model, the two-step model, which I'm now calling it, told me to. All right, guys, I'll see you in the next video.